The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be on Monday, Tuesday, Wednesday, Thursday, Friday at 11 o'clock till noon Eastern Time. Right now, this is the time at 877-927-6648 because I'd love to hear from you. Now, what's most important about today is that the E-minis have used the, remember I spoke about that yesterday? I said they're sitting right. In fact, I spoke about that on Friday. I said the E-minis have gone down to the 200-period exponential moving average. If you're looking at my charts, I always forget to do that. I like to open it up so I can see which color charts to use, which are showing up best. I'm going to tfnn.mobi. There we go. Press that button. Of course, get the volume off. You don't want to get the middle of the... There we are. Get volume off. And, yes, so what we're looking at is the E-minis. If you're looking at my charts, the one on the left, the daily, says that 200-period moving average at 1,300 was at 61. Now it's at 62. It's rising a bit. Was very important. It also says that the candle that's formed, and this is something that I spent a lot of time on in my Master Trader Series. I discuss the implications of this kind of candle, what it means and what you can expect. So that to me, I explained that to subscribers this morning in my opening call. That's my daily service. And what is very important about this particular pattern, is that how the E-minis can actually, how it applies to the high of that particular candle. Price movement is very important at this particular point, because if the E-minis close above 1388, the high of the 9th, that says 1392 is the 9-period exponential moving average, and that would be a target. On the downside, it says, be careful. The close below 1363.50 would be very important. At the same time, it says that the doji close, that doji is a Japanese type candle. You open and close at the same price, and you have this wick that's usually a shortish wick. It's a very long wick. I've done some studies. So for a long time, I've had a particular methodology that I use. So in this particular instance, there's a pattern that's forming that says, yes, there could be a bounce. The bounce that's going to be really important is the bounce that goes, if it does, above 1395-ish into the 1396, 98 area. Because if it can get there, that's showing that it has strength to get into that very ugly candle of the 7th with a low of 1384. Now, what's even more important in the work that I'm doing is that when we are looking at the candles that form, you've also got the implication that that whole left side cluster pattern of candles back around the 24th, 25th, and 26th of October, those are going to be very important. Now what we're looking at is that there's a pattern that I showed subscribers this morning in the 120-minute chart that says that the low that was made at 1363.50 and that single leg A up bounce, and then the pullback after that, and that's going to be very important because it says that you've got a rectangle formation that is outlining the parameters very clearly, and that takes you to the high of 1388. And there's that gray rectangle. When you get to the pink area, you're starting to go into fresh territory. And all of a sudden, if everything kicks in, you can see a bounce that goes all the way to 1403. So that's the E-minis. On the downside, certainly at any point in this week, a break below 1363.50 is very negative. Now, let me do this. In the Dow itself, now I'm going to go to this particular issue. There you are. I'm going to run the numbers in a moment. But first, let me just show you the correlation between the Dow chart that we're looking at, which was underneath the 200-period exponential moving average. And let's go to the SPY, because that's the one I know just there on the SPY, which is holding it just like the E-minis. So what we're looking at here is a slightly weaker Dow, a little bit stronger SPY. That's the S&P trading vehicle. So I'm watching this real closely. Let's go through the numbers. The Dow right now is at 12,892, up 77. The S&P, and it was much lower earlier, the futures were down 80 points. The composite index is up 2 at 29.06, and the S&P is up 6 at 1386. Now what I'm looking at, and this is going to be kind of important to me, is that, just hold on one second. I have to yell. I've got workers here, and I'm just going to have to yell for a second. I'll be a few minutes. Get started. There you are, yell and scream at the same time, do two, three things, and here we are. So what I'm looking at here is that the SPY can run up, and right now it's at 1386, up 6 points. What's really important about the SPY is it's got resistance at 139.85. The stochastics are making a little W formation. You need to see that the MACD starts to improve and cross positively, and the green line right there needs to go above the red line, and that red line is a slow-moving average. So you've got the fast-moving average, and then you've got the slow-moving average. What's really important about this particular bounce is that putting it into the context, I'll go through some of the numbers in a moment, but putting it into the context of the volatility index, and I spent a chunk of time the last 2 days for subscribers going through the various formations that we're looking at in the volatility index in terms of numbers. And coming back into the 16s as it did yesterday, said, hey, we are really close to some kind of a bounce, and it might turn out to be more than a bounce. I just don't know yet. But one thing's for sure, this fiscal cliff, like a parrot, it's just like an echo, like you're in this big chamber and you just keep hearing fiscal cliff, fiscal cliff, fiscal cliff, fiscal cliff, fiscal cliff. It just keeps like a round. It just keeps coming back and forth. That says to me that there is buying pressure, but I'm not convinced that buying, you see, if there's buying pressure and the Dow is not able to close the day up about 90 to 120, or by tomorrow it's gone up to the 12,000, 930s, 950s, but instead it just keeps failing, that's wheel spin, and that says that the volatility index, while it's very important, is telling me that there is wheel spin. There's energy being usurped, but you're not seeing represented by my four very important key stocks. GE, which is up a little bit right now, it's at 20.94, up 5 cents, made a trough F, just off the 200-period exponential moving average. Let me make these charts bigger. IBM, we spoke about that yesterday. Ugly-looking chart, but made a nice candle yesterday. Should have a bounce, and that bounce really could take it to, it's at 190.76. They could take it to 190. Oh, yeah, a bounce could easily get it to 193, 195. Now, here's what's important. Triple M, which was doing beautifully and then gapped down, is trying to make a comeback, and the stochastic and the MACD are acting very well. So if Triple M at 89.92 is able to start to get to that gap and then fill the gap by going to 91.50 or higher, that's going to be very important, because this is really, in the weekly chart, this is still basically a high-level consolidation for Triple M. Now we get UTX. UTX was acting very poorly. It made a complete H pattern in both the daily and the weekly. It made a lower low on the right side of the weekly. And the monthly chart is just making this pattern that says, ho-hum, I'm just in this trading range. I'm making, so far I haven't made lower highs or lower lows, but I'm making almost like a wedge pattern as the apex is starting to narrow. Yeah, you got to watch me real closely, because if I'm able at 77.63, instead of plunging to a lower low below 75.64 in the next 3 to 5 days, if I'm able to tackle the 79.50 area, that's 2 points higher, that'll say the rotation correction is unfolding. The rotation correction would say that the TLT is in a trading range, probably making leg D, maybe even peak D. I don't know, but the MACD and stochastic are still very good. That's the Lehman 20-year Treasury bond. And bonds right now are up 8 cents. So 8 ticks. So this is going to be an important period. If I'm looking at the DXY, if I'm looking at the dollar, this is a doji leg E. It says, yeah, you could pull back. But once again, the MACD and stochastic are still very, very strong. So what I'm looking at here is a counter trend rally. I have no choice at this particular point to call it a counter trend rally. And at the same time, our three bears, let me just run this through so you can see what I'm looking at. VIXI, which is back down at 16.17, that should show buying power. And so far, it's failed to activate that buying power, except for this morning. If you're looking at the bonds or the TLT, very strong leg D, but until it really breaks into the 127.80s, and right now it's at 126.29 in leg D, I have to say, great move, but within a trading band. Now, what's really important in my work, looking out, that I'm skipping to the monthly chart, not the weekly. That monthly chart has held the 9-period moving average. That's that purple line that you can see there. It is going towards the most important doji candle. That's the candle of August, with a high of 130.69 and low of 120.52 and a close of 127.72. So that's going to be very important. That's why I'm saying that the 127's up there, it's going to be something else. It's going to say there's a really good chance that bonds will make another leg up above 132.21. And then the final thing I want to look at, no, not final, I want to look at gold. Gold right now is it's up 60 cents. The gold contract, the peak F in the monthly, but is holding very well. The weekly chart is at this particular point saying it's trying to make it a cup formation, but the evidence is that I have to wait. It's hard to say. But look what happened. You see the 200-period exponential moving average here? This is the blue line, that blue line right there. Look, it hit it exactly. I told you on Friday. I said, oh, gold has hit that number, and now it can have a pretty good bounce. The bounce actually has gone quite nicely higher from the low, from the 1672.50 area all the way to 1739.40. So that says to me, gold is acting pretty well, especially when you consider that the dollar's been rallying quite nicely. Hey, we've got a very interesting market here, more than a bifurcated market. We've got markets that are telling us, I showed this to subscribers yesterday. I said, in fact, let me show you what I do for my subscribers every day. This is what I do. Let me show you this chart here. That's the chart. This is just the overview. This is just one chart with all the information that I give. All of this is unique work to the ChapmanWave. I showed that in the last few days, you've got the Dow going down at the same time as the VIX. That's really unusual. Not to this extent. It does it very briefly, but not as concerted as this. That's number one. Number two, you've got the trend line support, which is just coming in the daily charts, both the Dow and the S&P, and I discuss in great detail the volatility index and all the different things that we are looking at and what we can expect if the Dow is up a certain point, a number of points at 12:30 p.m. So that's what I show, and as we go out, I will just say it's 877-927-6648. I'd love to take your calls.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. My pleasure to be here. And it's 877-927-6648. And don't forget, you can get Tiger TV. You can see these charts I'm showing you right now. They show just great, even on my cell phone. On your smartphone, you go to TFNN homepage on your phone browser, look for the banner on the right that says Get Tiger TV, hit that banner, and Tiger TV comes up streaming. You get the video, the charts, the host, the audio, the whole ball of wax. So bookmark that page for quick access to Tiger TV on the smartphone. Let me just do a couple of things. Had a question from Jason last night, and sorry, Jason, I just been really busy trying to get everything organized here. I want to know about interest in my take on WIN and LVS. I will still email you in case you're not listening. But I went through LVS the other day with a caller, and I said, the 200-period moving average is now turning into very strong resistance. I don't like the chart, the daily chart. I can show it with the gray area, trading at 43.01, down 45 cents when the general market is attempting to rally. The weekly chart has got the pattern that looks so far like the close below is at 43.02. A close below 41.70 will say be careful because the low of 40.50 the week of the 7th of July will become a target, and if it closes under that, it's got a dreaded H pattern. Let me just go to the black charts because I know I've got LVS in the longer term, notated very nicely. There you go. Now you see, there's that peak F, but it's a peak F way below the 148 huge candle from the October of 2007, which plunged down to $1.38. I'd have to say a rally from $1.38 to 62.09, that's pretty damn good. So what's happened is that it's pullback, made the cup formation, testing the bottom. The bottom was down at around about the 36-ish area. The low most recently was a 34.72, lower than that in July. So I suspect that this thing has a lot of downside pressure. I would say that the upside is probably going to be just pop-ups just relief rallies. It's trying to hold the 200-period moving average in the weekly at about 42.48. If it goes under it, that's not very good. But if it bounces, it could bounce. And this is the candle that you're looking at the week of the last week, which is a high of 45.95. I don't see anything yet. But WIN is a better-looking chart in that it has behaved better because it is holding in the daily. It's holding above the 200-period exponential moving average. It made, I don't know how to count this. Let me just double check. So this is going to be A, B, C, D, E, F, G. The way the daily is holding up, I'm going to have to say that there's a better chance that WIN has a rally. It's up only 22 cents at 107.64 WYNN, WIN Resorts. And Las Vegas Sands was the other one. I'm looking at this and I'm saying, it's trying to rally. But I suspect that they are both in an area that is going to make it tough to sustain a rally unless the weekly chart, which is actually technically holding a lot better, unless by Friday afternoon, if there is a close in WIN at 110.88, I'd say that's good action. And there's a good chance it's going to retest, and maybe it'll make leg D up. It's already got peak A, B. Let me just put in my C over here. There's the C. And it looks like it has a better chance. Out of the two stocks, there's different prices altogether. But there's a much better chance that, and I'm even going to put an up arrow in here because the MACD did go over 80%. Right now it's at 84%, so it deserves it. So a much better chart. If you're going to trade even if it's just a bounce, Las Vegas Sands, there's no way that I would hold it if it broke under today's low of 105.58 in a full position. Small position because you want to see how 104.60 would hold. So let's say a 3-point stop in a small position. If it gets to 109.47, raise that stop to a profit no matter what happens. So that's my analysis there. And both of them are saying they're not the favored group in this particular move right now, but those are the parameters that I'd be looking at. I will try to give you a quick, and you said, I'm kind of thrown off, but it looks like completed peak F. Yes, that's Las Vegas Sands and WIN. Both went to peak F in the monthly. Look at that. Beautiful left side, right side price time match in Las Vegas in WIN. Goes from 160.05 back in 2007 down to 650 and then up to 172.58. Now there's a chance. There's just a chance. It is making in the monthly another cup formation. When all the talk about the financial cliff says to me, something's wrong with that picture when every single person, every layman now that I speak to, every friend of mine is saying fiscal cliff, fiscal cliff. What do they know about a fiscal cliff? It's like me talking about the Red Sox or football. I don't know. I'm just going to repeat what I'm told. So that's the attitude. We're all novices when it comes to areas of expertise that we're not involved in. So that's the moment for now. Oh, no calls. 877-927-6648. Hey, we're trying overseas number. Let's go for 727-445-1044. 727-445-1044.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Let me just mention, Home Depot's spiraled higher. It's up at 64.04, hit a high of 60, why is that different? 64.44. And we were long this the other day. We took a tiny loss, but the only reason I took the loss is because there was a pattern that said that if the arch formation pulls back a little further, I forgot that there were earnings were out today. If I remember that the earnings were out today, I actually would have added to the position. Why? Because let's face it, Home Depot is the one that benefits from the chaos in the from the storm. There's just no question about it. They're going to be the beneficiaries, and they're going to be the beneficiaries for a little while. So that's fine. I mean, that's what happens. I have very tight stops and tight entrances, and that's the way it works. But it's still in leg D. And then I can put this I can change it. So the technique that you're looking at now, when I've changed the plus sign to an up arrow, yes, it's looking back in retrospect, but it doesn't matter, because that's the way you need to be able to correct. You need to be able to upgrade. You need to be able to modify, because in the ChapmanWave, the last peak is the most important peak that you want to look at, and the last trough. That's the gist of it, is that it's giving you all that information. Now, what's very important about Home Depot is that the 9-period moving average, instead of sliding as it was looking as if it was going to do earlier in the week, it's walking the 9-period exponential moving average. And the MACD almost turned down, and now it's deflected higher. Stochastic still at 85%, and the monthly chart is still very strong. So this is going to be a very important stock. If you look at other stocks, let me just take some that we always look at in terms of beneficiaries from let me go to the black background charts because those are notated. Let's go to Masco, MAS, former stock that we've had. Yep, the weekly chart, the monthly chart is saying it's in leg C. So, that's interesting. 16.48 was the high in September. 16.33 was the high in October, and 16.50. So it's in leg D with a very good chance that it wants to at least try for the 18.30 area sometime in the coming months, if, and this is a very big if because it is leg D, if the MACD and stochastic hold very well as they are at this particular point. So the question here becomes, let's go to the ITB, which is the U.S. housing sector index, had a sharp, in the ChapmanWave, what we look for is the most obvious lowest low bar. That starts a buy signal. In this case, it was the buy signal came in, 19.08 was the low on the 26th of, what did I say it was? 19.06 was the low of, change that to yellow. You need for you to see that. There you are. That was the low of the 26. So it starts a buy signal. It actually wasn't even, it's just a plus sign there. It can get upgraded later. It spirals higher to about the 20.75 level in the 5th of October, pulls back sharply, doesn't break the 1906 low, it goes to 19.15. Then it starts another move that goes B, C, and D. That is, in fact, the second buy mode going to peak D since back in August of last year. So what we've done, we've seen two peak Ds in the daily. You've also got a very interesting pattern that says in the weekly chart there's a peak E. The MACD is turning down. There's huge volume to the downside. The week of the 9th of November, that's last week. But the stochastic is still at 83%. So it's saying, hey, don't get too carried away because there's internal strength. Now, what I find fascinating, look at this. I mean, this gets a little lesson for those of you who want to learn about the ChapmanWave. And I am having a Master Trader series on the ChapmanWave, that is. Starting from the very basics, you get my CD, you get a webinar for free, you get just a chunk of stuff. I love teaching this. I want to teach it. It's so important, I believe, for people to add robust systems to their own methodology. And in this particular case, look what happened. If you watch the fast-moving average of the MACD in the weekly chart, look, that's the price of the stock. So it's integral. That's why I love to say, yes, please use Fibonacci's, use tigers and tiger butterflies or butterflies and Gartleys. They're really important. Use whatever techniques you want. But there are techniques integral to the machination, to the system itself that tells you an incredible amount. And it says in the look-back period, the 9-period differential, even though the price has gone below the slow-moving average in the MACD, follow another indicator which is not the 9-period exponential moving average, not the 9-period differential between the 12 and 26 moving averages, period moving averages. Look at the 9-period exponential moving average right here, the white line. That's how we want to use these techniques. It's so important to have a huge toolbox where you're looking at not just one indicator. One indicator can be great, but what if it just isn't quite working? You want to back up. You're not going to drive your car with no brakes just because you can put into second gear, third gear, and second gear, and first to slow down. You want brakes. You don't want to just have brakes. You want to have assisted braking. You don't want to just have assisted braking. You want all these other things that go with. This is what safety is all about. Same thing in the market. You want as many tools, and you want to learn how to use them correctly. So look at this doji candle right there. the week of the 2nd of November in MAS, MASTEC, sorry, in the ITB, which is the U.S. Construction Index, and that's the iShares. And it says, hey, as long as this 9-period moving average is support, exponential moving average in the weekly is support, and it doesn't close below 19, let's call it 19.70, it's at 19.95 on Friday afternoon, this is quite good. If it starts to close lower, and next week it closes underneath this week's low, let's just say that 19.46 is this week's low. If it closes under that, you've got to be careful, because it doesn't say it's a major sell signal, because the monthly chart is still very strong, but it says be careful, because then the lows of 19.08 back in the week of the 28th of September, that'll be important. And if it breaks under that, then all of a sudden you've got a sell signal that's gone to a sell mode, and that's very negative. So now let's talk about the market. The market's up, the Dow's up 52, S&P's up 5. So they're both up 0.41%. That's a little unusual. I prefer to see the S&P up a little bit more than the Dow on a percentage basis, or a little bit ahead on that percentage basis. So now let's go to this and say, okay, what are we really looking at here? Let's look at monthly charts. It's very important this particular time. Now, I showed subscribers. I won't do it now because I want to discuss it in much greater detail later on. But I showed subscribers a particular monthly chart in the S&P. And that monthly chart has very clear parameters. There were no technicals. It's just the price. That's all it is. But if I had to look at the monthly chart, SPX.X, and say, wait a minute, all this fiscal cliff, and yet the MACD is at 88%. The MACD is holding very nicely with the fast-moving average, just nicely, not great, but above the fast-moving. The fast-moving average is above the slow-moving average. And if I'm looking at the last peak went to a higher high of 1474, let me just put that in, 1474s, I'll just put 1474s, back in, not last month, but the month before in October, in September, the stochastic is still holding at 88%. That is really very good. But look at the 9-period exponential moving average. It's being tested right now. If that 9-period moving average becomes resistance at some point in November to December, that's going to say, hey, be careful. This could be a peak F-top of significance. If, on the other hand, it holds with all this fiscal cliff talk, if we're rotating through some and I'm looking at the stocks that we have in my portfolio in my opening call, so far the one long that we have left is up very nicely. The 4 shorts that we have are still way below our shorting levels. One in particular has gone to an even lower low. And that says to me, hey, this is a period where I'm personally seeing far fewer long positions. That is not just bounces, but a sustained long position, and a far greater number of short positions, and that's looking at monthly charts, let alone the monthly, the weekly, and the daily. So it says to me, my bias right now in my opening call is to the downside, but do not expect that everything's going to go down. There are going to be stocks that do rally. Now, I'm looking at stocks that I have no position in this. I'm just talking it out loud. I have no position. I might have a position sometime soon. But if you look at Whole Foods, WFM, Whole Foods, let me just get it right there. Whole Foods had a very ugly candle last week, but it's had a spectacular move. It's gone from $7.04 back in November of 2008. 5 years later, it hits 101.86, and now it's at 91.06, 10 points off, 10%. Big deal is 10% off. After a most spectacular, I can't even work it out, 7,000, it's 1,000. Yeah, it's just over, it's more than 1,000%. That's fantastic. Now, this is very interesting. Look, when you're looking at Whole Foods monthly chart, you see how it's walked the 9-period exponential moving average? If it pulls back under that, then I'm saying, all right, watch the stochastic, watch the MACD. My gut feeling says Whole Foods is in a consolidation. It's not going to make a new high anytime soon, probably going to make lower lows, but it doesn't have to drop significantly, but I see it making lower lows. Let's go to Charlie in Brighton, Michigan. Hi, Charlie. How are you?
Great. How you doing?
Very well, thank you. You'd like to look at?
Staples.
Okay, now this is Brighton, Michigan?
That's correct.
Yeah, we have a Brighton right here in Boston, just outside Boston.
Yeah.
Now, it's funny that you mentioned Staples. I think I'd mentioned it a little while back during the elections. I kept seeing this guy, Sternberg, whatever his name is,
right,
all over the show, and he was a big Romney supporter. And I'm saying to myself, Mr. Sternberg, get out of that. Go back to the office and get Staples back on track. What the heck? What right do you have in a stock that should be top of the line, used to be top of the line, that made a round number high of 28 back in December of 2006, and is now trading at $11? Get back to the office.
Right.
That's what I wanted to say. Of course, nobody heard me. I think I said it once, but I didn't say it more than that because nobody's going to listen to me. But that's the way I feel. This guy, it's a most beautiful concept. I just don't know. I just don't understand what's going on. I go to Staples. It's not nearly as busy as it used to be, but it's busy. I don't know why. I don't know why they're not actually making profits. You know what I think it is? Due to a number of factors, and it's probably due to the plethora of home offices, where most people are not using 3,000 pages a week of paper. They're not using as much ink as you do in offices. I think that could very well be part of the problem. So, what is your question?
Buy, hold, or sell?
Okay, I'm going to make a flat-out statement right here. Until I see that Mr. I don't even know where he is. I don't know if he is even I know that he was one of the founders of Staples. I don't know where he is in the business right now. But there's nobody running the office as far as I can tell. I'm going to make a suggestion and say to you that if there is a rally, that rally has to take out first 1270. That was the high of the week of the 14th of September. And then the week of the 17th of August, it has to take out 13.62. Until it can really do that and sustain all the downside pressures. And, of course, I forgot, I was about to mention that I got sidetracked. As one of our den members, Zital, says, Staples dying at the hands of Amazon. It's absolutely true, but Staples has an online factor. They have, I think it's more than just Amazon. I think it's their business plan. There's just no focus. That's all I can say. The chart says there's no focus. So if you want to play, you're looking for a position. From the tone of your voice, you're looking for something that you might be able to hold for 6 weeks to 3 months. Is that kind of what you're looking at?
Or longer.
Yeah, or even longer. You see, I'm with you. I've had this on my list. I couldn't tell you how many times. This and Boston Scientific just finally get their act together and turn around. I'm still waiting. So I'm going to make a suggestion. That says, because at $11, a 1.5 point move to the downside gets to the 12, 15% area of a loss, to make up on the upside, I'm suspecting that the risk-reward on a shorter-term basis is not there. When I look at it as a longer-term basis, I say, okay, what if they do get their act together? What would really get Staples, which I still say should be one of the really good stocks here, based on many factors? I'm going to have to say to you that maybe a retest of 10.57 is important. You know what I'm going to do? Give me a second. If I can find Office Max, I'm going to see what's in the group. I'm going to see how it rates. Hold on. We'll be right back. Charlie, if you can hold on, I'll be back with Charlie in Brighton, Michigan, looking at Staples. Dow's only up.
Saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months.
But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Weekly chart, and the MACD is good. So just start the position, and then together, that you don't have to. I'm just saying, I prefer the stock. Looking out on a monthly basis, so far, if I'm correct that this has still got to go, it doesn't have to, but it should go to a leg D above 877. You can see that you're getting a sense of strength rather than Staples' weakness. So out of the two, I much prefer Office Max. I don't know what they're doing that's far superior to Staples, but it's a much nicer. The weekly chart is good. Monthly chart has gone from the high of 55.40 back in February of 2007, plunged down to that lows, down to 1.86. So it's had a very nice comeback to the 19.79 level. Now it's a rally. So it's like a peak C1, C2. I don't want to get into that, but it's a double top formation. Comes back, and now it's trying to repair. And the monthly chart says it's trying to get to 790 was the high of May of last year. So I like it, and the reason why I say you can buy a small position, if you have a small position, if it does drop 70 cents or 80 cents, that's 10%, but it's 10% of a small position because you're looking at the chance that it could go from the 840 level possibly to 974. So if you want to have a little nibble, give it a little nibble on it, and we can talk again maybe Friday and see how it's doing. Thanks for calling, Charlie. I appreciate it. Folks, Basil Chapman, stay tuned. You've got the options hour, just a great show coming up, and with Victor Jones, and I'll be back tomorrow. And thanks for being here. My service is the opening call. Don't forget, check out my webinar coming up December 6th and 7th, 2 days.